What's up, guys? It's Paul here from the 95 Investors Club channel. In this video, I want to talk to you about why GameStop short squeeze so much, shooting up like crazy, as well as why other stocks like AMC and BlackBerry also have been shooting up, and also give you an idea of what it really requires for a stock to short squeeze so much, and potentially also other stocks that might short squeeze from here. Okay, and another thing I want to do is compare it with the stock like Tesla, for example, which used to be the most shorted stock before they shot up like crazy. Okay, now I want to make this comparison so that you have a better idea why you're doing this and why there might be a short squeeze, which are potentially good candidates, and you're not just blindly putting money into a stock expecting that it's going to go to the moon. Okay, so for starters, there are three primary things that you need for a stock to short squeeze. Okay, first and foremost, you need a very high short interest, and you can check that on a website like highshortinterest.com. You can see that GameStop has the highest short interest. It used to be over 140%, but recently, when a lot of the brokerages stopped people from trading, looks like a lot of the hedge funds were able to cover a portion of their short positions, and that brought the short interest down to 121%, which is still really high, because anything over 20-25% is considered high short interest. As you can see here, this website only shows you stocks which have over a 20% short interest. Okay, so the short interest is still pretty high on GameStop, which is why it's short squeezed so much. Secondly, you also need the company to be small enough that it can squeeze so much. Okay, so usually when short squeeze happened before, with like Tesla, for example, it was because there were so many people who were shorting the stocks, and this was almost like a fight between hedge firms and other billionaire firms that were shorting stocks, but there are other billionaire firms that were betting for the stock, and so a combination of that created a short squeeze, and that's why stocks started shooting up. But GameStop, before the short squeeze, when it was still a $3 or $4 penny stock pretty much, it was less than $1 billion. It was hardly $700 or $800 million stock, which means with that kind of a high short interest, when all the retail investors started buying a bunch of call options and shares and millions and almost billions worth just by the Wall Street bets guys, it created an intense buying pressure. Okay, now the third thing you also need is you need a couple of good catalysts that can push the stock price up. Okay, so for the short squeeze to happen, you need the stock price to go up, which will force the shorts to actually buy back their short positions, which creates further buying pressure, and that's how it keeps shooting back up. Okay, but if there's no good news on the company whatsoever, there's no reason why the stock price would go up, and so there's no reason for the shorts to consider covering their position, and so it's never going to happen. Okay, so some key things for GameStop that really made them start shooting up, first of all, is the fact that there have been some fundamental improvements in GameStop business, which have been undermining the bearish consensus on the stock, including a string of earnings beats and analyst upgrades. Okay, so that was one thing. They also had the earnings also surprised upside due to increased spending on gaming due to the pandemic and the new gaming console cycle. Another catalyst was the appointment of Chewy founder to GameStop's board of directors, who put in a 12.9% stake in the company and is focusing on helping the company transition to e-commerce. And so all these different factors is what made them go from the lows of $257 to $20 at the end of 2020. Okay, now even at these prices, a lot of people realize that this is still a highly shorted stock with a 140% short interest, and it looked like they were slowly transitioning into a recovery. Now, because a lot of the hedge funds still thought that this company is going to go bankrupt, they have no future, and they were shorting it so much, clearly all of the Wall Street bets guys ganged up on it to start buying a lot of call options, far out of the money call options, and millions in shares, which really started pushing the stock up. Okay, that's what got them to $20 to $60 or so. And then people like Chama posted that he bought $50,000 worth of, or I think it was 50,000 call options for Feb 19th. That made them shoot up another more. And then Elon Musk tweeted GameStocks, and before he knew it, GameStop was over $300. And they finally came back down after a lot of brokerages, obviously starting with Robinhood, stopped people from buying it because of the insane volatility. I don't want to get into that about the legality and Robinhood getting sued and all. I just want to talk to you about what causes a short squeeze. So because of all that, they dropped back down once it resumed. Now it's back over $300. But if you're still considering getting into GameStop, expecting it to shoot back up, there's one key thing you need to remember. Okay, now GameStop has a market cap of $22 or $23 billion. They shot up from maybe $600-700 million to $22 billion, which is huge, guys. So if you think it'll go from 22 billion, sorry, a $300 stock price to 1,000, they need to go from a $22 billion company to 66 or a $70 billion company. Okay, now for that to happen, us regular retail investors may or may not be able to do that. That's going to require a really strong catalyst where you have other billionaire firms actually betting on the stock and not just shorting it. Okay, so it may happen, you never know. The market has been crazy. I didn't expect them to hit 300 either, but if it can go to 1,000, that would be absolutely crazy. But I think you're better off if you start looking for other potential short squeezes. Okay, so one of the stocks that I was looking at is obviously AMC here. So actually, before I get into AMC, let me show you what happened with Tesla and why I wanted to compare it with Tesla itself. So a long time ago, Tesla was hovering around this, I would say 60 or so, but this was $300 before the stock split. But it was hovering in this range, trading pretty much sideways for 5-6 years. And it was one of the most shorted stocks back then, okay? Because people kept thinking Tesla is going to go bankrupt. They don't have a future at all. They're competing in the EV market. There was not a whole lot of hype around electric vehicles yet, and which was why most people were shorting Tesla. And right around here, towards the end of 2019, was when they posted their first quarterly profit, which made them shoot up like crazy, because now a lot of investors were positive about it. They made a profit, so they were expecting some good momentum, and because they were the most shorted stock, they shot up like crazy from the end of December to Feb. Okay, now they could have continued shooting up, but then we had the pandemic, of course, and this was the highs in Feb, and of course it crashed back down. And once we started recovering, they've just been going up and up. They've posted their second quarterly profit, third quarterly profit, and before you knew it, they had a full year of profit. And you started having billionaire hedge funds like Ron Barron, Cathie Wood of ARK Invest coming out saying that Tesla has a price target of $7,000, $14,000, that they're going to be a trillion dollar company by 2024 or 2030. And all these catalysts came in, and that's exactly why it was able to go from a $50-60 billion company all the way to $750 billion as of today. Okay, so you need that many catalysts. You need billionaire hedge funds to start putting money into the stock for it to go from 60-70 billion to 750 billion. And I don't see that happening with GameStop. So I highly recommend that you be careful with that. Okay. Now, having said that, in terms of next short squeeze candidates, AMC is another pretty good one. If you look at it historically, this was a pretty strong resistance around $7.50 here. We recently retested that. We recently retested it when trading was blocked, and we're starting to move back up. There's still a $1.4 billion market cap that you can see at the bottom here. And the catalyst for AMC was, again, people were thinking AMC is going to go bankrupt anytime soon, but they were able to lock in a $917 million debt financing, which showed that they won't go bankrupt anytime soon. Okay, they might be okay until later in 2021 if things start getting back to normalcy, or if there is some kind of a buyout potential for AMC. They do have some kind of catalyst that can make them survive. Okay, so that's why I still think AMC has some potential. I don't have any shares or call options on it yet, in full transparency, but AMC does have potential in my opinion. Okay, because I like AMC too. If theaters open back up normally, I'd love to go to AMC and watch a movie myself, and I'm sure a lot of people who have been cooped up at home would like to go to a theater and watch movies at some point. Okay, so AMC is a pretty good candidate. A lot of people were harping on Nokia, but here's the thing, guys. First of all, have a look at this website. This is a website that shows you the highest short interest companies, and if I do a quick search for Nokia is not even in the top short interest companies. You need this is a website with companies having a short interest over 20%, and Nokia is not even on here. So if I told you that's the first component you need for a short squeeze, and if Nokia doesn't have a high short interest, then there's a good chance this is not going to happen, guys. They do have a catalyst like 5G, for example. So if you want to hold it for the next few years, expecting that they'll benefit from 5G rollout with licensing and everything, then go ahead and buy some shares for now, but don't expect that Nokia is going to go from $4 to $300 like GameStop. Okay, in my opinion, it's not going to happen with Nokia. Now, other candidates, in my opinion, which I'm excited about, is actually Virgin Galactic here, which is the third most shorted stock with the 72% short interest, and then Fubo TV, which is also at nearly 72% short interest. Okay, so let me pull up the charts here. So with Virgin Galactic, we just saw this huge little squeeze here. It shot past the previous all-time highs around 42.50, and we just retested and started bouncing back up. A lot of the pullback recently, this here, was because their previous launch was cancelled because of some computer error. But if there's any other catalyst that comes up saying that they're going to launch again in the next couple of months, then that's going to cause them to shoot back up. Okay, so definitely watch it for Virgin Galactic. They have a bright future, of course, with space tourism and hypersonic travel for the next 10-20 years. I have a lot of shares anyway. I'm not playing it for a short squeeze, but they definitely have the potential to squeeze, because every time a new catalyst came in, they've always squeezed up. They shoot up, come back down, high short interest, a piece of good news, they shoot back up. So this has been a pretty common trend with Virgin Galactic, and especially now that they cross all-time highs, just watch out for Virgin Galactic to shoot back up potentially. Okay, now Fubo is another one that I'm pretty excited about. One more thing about Virgin Galactic, I wanted to show you the market cap, because I told you it needs to be a small enough company. Market cap is 10.3 billion. That's not too bad. This is a company with a really, really bright future, and compared to GameStop, it's less than half the size of GameStop. Okay, then watch it for Fubo as well. Fubo, same thing, market cap of only 2.8 billion, and they're in the streaming services category, which obviously has so many catalysts for the future. Last time they had some piece of good news. They shot up from $27 to over $62 in just about a week or so. This was a classic example of a short squeeze. Then obviously they came back down, because after a short squeeze, this typically tends to happen. They crash just as fast as they shoot up, but now they're back up there. They're getting back up. We do have earnings coming up. We may see a potential run up leading to earnings. They are bouncing off of the support here around $42, and it's it's in the top 4 most shorted stocks. So definitely add Fubo also to your watch list, and this is a company that has a bright future as well. Okay, guys, so small market cap, high short interest, bright future. These are the things that you need for a stock to short squeeze, and so please use these before you decide which stocks to get into. For a short squeeze, don't just blindly invest in a company just because some people are pumping it, or just because the share price is only $3. How much lower can it go? No, that's not how it works. Look for catalysts. Even this article actually talks about 3 other stocks that have the potential to short squeeze. They talked about Bed Bath & Beyond, Tilray, GoGo. All these are pretty high on the short interest as well. Bed Bath & Beyond is the 5th most shorted stock. GoGo is here at 44%. Tilray was further below, around 25%. So these are catalysts. For example, Tilray, if the more and more cannabis companies cannabis can get legalized under a Biden presidency, and a lot of the cannabis stocks can benefit from it. So I can kind of understand why Tilray has potential. Here they talk about how Bed Bath & Beyond has potential, because we have a strong housing market right now, as you can see, and there's a flush consumer due to looming stimulus payments who might be interested in buying things for their homes from Bed Bath & Beyond. So that could act as a catalyst. I don't know much about GoGo itself, but it offers Wi-Fi access to passengers on flights. And they say, like many travel-related stocks, they suffered during the pandemic because people were not flying. So this is also a potential stock that you can keep in mind, which has a potential in the future. Okay, so that's all I wanted to share with you guys here for today. I hope you found this helpful. Leave a comment below on which stocks you are watching. What do you think about this analysis? Do you agree with these companies that they may short squeeze? And if so, let me know what other stocks that you're watching, and if you agree with my thesis here. Okay, if you enjoyed the video, guys, please do smash that like button, leave a comment below if you have any questions, and be sure to subscribe if you haven't already, and hit that notification bell. Okay, thanks again for watching, and until next time.